Boom, we are live, ladies and gentlemen. Thanks for joining us today. It was a volatile week in the markets. We definitely bounced higher than I thought we were going to. We came right back to the point of the control. We're going to do a live stream today, though, so we're going to look at Bitcoin. We're going to take a look at the general markets like the S&P 500, see what the dollar is doing. We got some liquidation heat maps I wanted to look at. And just in general, I think the overall market trend is still down, but I think the macro market trend is still bullish again. So you're always kind of trying to express two things at once. Number one, I think the bull market started a while ago, ran for 6 months, looking for cool off time period here. Now the trading range for Bitcoin has held actually really strong, stronger than I thought it was going to, which is also one of the reasons why we had such a significant bounce. So for Bitcoin, we're going to go out, and here's the chart on the 6 hour. So we are still basically smack center in a horizontal trading range, which is it's indecisive at the moment. Again, we're still below the point of control, and we couldn't move back above the point of control. And that's usually a telltale sign, is the kind of closing below the control. But also I wanted to highlight again that if you're looking at my screen right now, you can see we're stuck between the 214 and 314 6-hour simple moving averages, creating this nice bottom of the range that's taking place right now. Once we hit the point of control, we tried to touch into it a few times, couldn't get back above. Supply and demand was decreasing throughout that process too. On the shorter time frame, it actually looks a little bit more noticeable. You can see where the trend shift started to take place. If we use the RSI here too, you can see that we are getting consistently higher prices but lower RSI. So this is what's known as bearish divergence. So again, about a week ago when the prices were at around 62,000, I was like, look, I think we're probably going to go to $52,000. I still actually think that's the case, although the scenario in which Bitcoin stays in this trading range now is higher. So this next area of consolidation, I think, is super important. Some of the assets have fallen dramatically. So just as an example, Psy here has fallen and broken the 2-hour trend. Avalanche fell right through and has totally changed the 4-hour trend, or the 1-hour trend. And here you can see a more traditional head and shoulders pattern breaking on Avalanche as well to the downside. So this next bit of, are we in accumulation or distribution? And this is why I said waiting for the trading range to form is so important, because the trading range hasn't formed yet, although it's showing us what might have formed. And there are smaller trading ranges along the way. And I was actually a little bummed because this trading range here shifted, closed above the 1 hour, and continued to move higher for not an insignificant bounce either, right? I mean, from the trend shift to here for Avalanche, that's 13%. In Fetch, it was actually even higher, I believe. The bottom of the box trading range here let's go to the 1 hour. So from the bottom of the trading range here for Fetch, there was almost a 30% bounce to the upside. So there's Fetch actually looks like the strongest out of everything so far, which is pretty interesting, because it's aside from Bitcoin still being the center of, I think, many monetary people's interests, Fetch here closed and tried to jump all the way back into the main portion of its trading range up here. It couldn't, though. As you can see, it couldn't get back above the point of control, nor could it get back above the simple moving averages here, and then was redirected quite quickly. We're in a bounce right now for Fetch and for most of the market. So what I wanted to do was keep an eye on the S&P 500. So we've been watching the S&P 500 here in a multiple month up movement with very little downside. Let's get rid of the RSI, scroll out here. As you could see, this move to the top of the SOS and the LPS was kind of expected. We were looking for some downside. in the S&P 500. And this is generally going to be the momentum indicator for all markets, regardless if it's Bitcoin or not. Because if we're correct about the overall thesis about all assets being inflated due to money printing in the trillions of dollars, then effectively all asset prices should move up, just better assets should move up faster, which is obviously what Bitcoin's been doing. It's been moving up faster than most things. But the S&P 500, I think, is a great mark of sentiment in all markets, and that's what we're looking for, is how do people feel, because that's how markets are traded, and they're not traded off more intelligent and fundamental things. Otherwise, Shiba Inu wouldn't have just been able to raise $12 million. People like investing in simpler things. I think the meme currency world is a great example of, if it's too complicated to explain to the average individual, then it almost doesn't matter how good it is. They might not adopt it anyways. So just something to keep in mind. But the S&P 500 here has bounced, but is showing weakness in its potential here, and might be turning around shortly. So as you can see on the 4-hour, we are right below the exponential moving averages and below the previous start of the range here. So the fact that we couldn't get back above the EMA here, I think, is again sign of more weakness. It's more noticeable on the 15-minute too. For those of you that are new to studying Wyckoff, it's so important to watch the volume and supply signatures to know whether the trend has shifted. So this supply signature versus this supply signature, and what you want to do is measure the downside versus the upside. And for a very brief moment, the downside, actually still just slightly weaker than the upside. So this could have another further bounce. So I'm not convinced yet that we're not going to go lower for the S&P 500, in which case that $52,000 area would be revisited. But Bitcoin here has just been so strong in this trading range. And it had some serious supply signatures test, but again, could not get back above the point of control or the creek. It's run right back down to its 45-minute moving averages. This is really hard to tell. I think the next bounce that we get is going to tell us everything about whether we do actually go down to 52,000 or not. And again, the reason why I originally thought that we would is just there was so much breakdown in the other assets. So, for instance, this is Solana. Again, we have been on a 10x move to the upside with no distribution whatsoever. We saw the first distribution take place within the range here at the top. We broke below that, and also now couldn't get back above into that range. This is usually the bearish indicator that we're going to see more downside, and that we see some type of more justifiable accumulation or redistribution range. So I'm not convinced either way. I'm not taking any long-term, all spot positions are staying at the moment, because there doesn't really matter. We'll wait till the bull market's over for that. But in terms of leverage positions, I didn't open anything. I'd put a few really high leverage shorts in just to hopefully curb for the downside, although those got stopped out too high of leverage apparently, which was not a great feeling, because it did go down. But again, looking at the closer footprint here with what the S&P 500 is doing, if the S&P 500 doesn't stay, again, it looks a little bit more noticeable on the 4-hour here. If it doesn't get back above its exponential bands here, and we just see wicks effectively come up into this area, we're going to come lower. And this is kind of what I thought we would see for the S&P 500, was actually a bigger LPS that brought us all the way to the top of the previous range. And that's quite common, is that the SOS backtests the range here. So and there's two. So we had SOS, LPS, SOS, LPS. And I suspect the finality of the market, both for the S&P 500 and Bitcoin, are going to be corollary, because again, the thesis hasn't changed, which is if they print a bunch of US dollars, all asset prices should be all asset prices should increase following that idea. Yeah, and again, I don't think that the bull market is over. These are just temporary changes. So if I think I went over Solana and Fetch for what this looks like. If you compare to the previous bull market, or any of the previous bull markets, especially in the altcoin territory, you have these huge run-ups. And what was the downside for Solana here was around 60%. What did we just get for Solana on the downside of either of these? 34%, and this one was closer, 40 to 50%. So even if this is a new trading range that's forming, let's say Solana is building a new trading range here as an example from the previous reaccumulation range, and it does something like this, even if it bounced to the top of the trading range, and you want to wait for something that's more reliable. That's why in these previous movements, when we were following this trading range as an example, because these were beautiful, this was a really easy way to just be patient. Spring came in, secondary test came in strong, and then your SOS and kind of backup phase, which couldn't get back through the middle of the market. So these types of indicators, it's just easier to have a high confidence trade for this run instead of trying to enter here, drawing out your patience and screwing with you. So generally what I try to do is wait for the trading range to form, and that's what I think we're about to witness now, is what these trading ranges look like as they form. And for Avalanche, it looks more like distribution. It looks like we've had an up thrust and we want to come back all the way back down to the bottom of the trading range around $32. Aptos is already back near the bottom of that same trading range here as well, which is something like this. So I suspect Bitcoin's going to probably do something similar. It's going to come all the way back down to the bottom of this trading range around $61,400. And what happens next is going to be the key indicator of whether we break down to 52,000 or we just continue up. And again, the reason why I thought we would break down to 52 grand is because of the weakness in what the S&P 500 is doing, how low I suspect that it's going to go, and just in general, the market sentiment. Once it's shifted like this, once you have a down, like you've broken the 6-month uptrend, if for instance, if the S&P 500 was already back above this EMA band, I would just be going long everything because I would be more convinced that we were just going to see a very strong reaction to the upside. But here again, I think what I'm waiting to see is some type of larger trading range, and maybe that brought us back to 530. But again, I think it does this. I think we have a reaccumulation after decline from this multi-month uptrend for the S&P 500 again. So nothing's really changed for I still think we're going to go to 52 grand for Bitcoin, but if we don't break below and close below lower on this next down cycle, then I'm going to have to change my idea and believe that I was wrong. But for now, I think we're going to go all the way back down to 61.7. We tested the top of the point of control, and there's just nothing out there that makes me believe otherwise. And not only that, the dollar is holding into what could be a potential SOS and break out of its trading range. So that would not bode great for for Bitcoin or the stock market either. So in general, I think it's easier to wait for a trading range if you're looking for a trade that's confident to the up or to the downside. Whereas although there was a great potential to trade like multiple, like Fetch again up 30% from the very bottom of its trading range, all from at $1.90 all the way up to $2.40. That's a 34% trade. That's a huge potential trade. So I feel bummed I didn't execute on the upside of this one, but again, it's because I expect still that we're going to see downside here as well. Now, but if it changes for some reason, and Fetch just happens to be one of the most bullish ones we've been watching because its upside has been so strong, there's a reason to think that it might not come back into the range and could go up. So I'm not opposed to switching my mentality, but for the moment being, at least, I don't think the downside is done. Let's see if we can find any more data for that by looking at Bitcoin. Again, the hour trend has shifted dramatically. We're at some key areas of support at the moment for our point of control. So we're going to want to watch this area. Do we get rejected and go down, or do we build support and go up? So we're looking for a final kind of trading range here to either confirm or deny us our lower tests. So again, it's just generally just easier to wait it out, even though you could be like, oh, you didn't catch the exact bottom of the market. I would rather be patient and wait for something that's high confidence, because then it allows me to build a good trade. If most of your spot positions, you could still just keep building month over month if you wanted. You could just buy it every month, whatever you wanted still, and get to enjoy the rest of the bull market. But if you're making trades, like very specific entry and exit points, then you have to be a bit more sticky. And then it's easier to be like, okay, cool, I was wrong here. I'll just be patient for the next entry, because that's what you should do. Whereas if you can literally just keep accumulating assets and you'll probably be fine for the next 10 years. Just trade dollars for assets and you'll probably do amazing. So don't fade, what just holding assets will do for you. Because I think it's very easy to misunderstand the importance of the thesis, which is the thesis right now is saying they're going to continue to print money basically forever. There's no way around that. It's just kind of whose dollar fails first. Currently, it's like the Japanese yen is failing, Argentina, there's a bunch of countries. I was looking just to see what comparative prices were in other countries. I find this stuff so cheap in some countries right now because the dollar is strong, right? So there's a very noticeable shift. And I think that kind of whipsaw effect, both this between currencies and the supply chains, are going to be very noticeable and strong over the next few months. So it's going to create these very sharp shifts in trend going forward between dollars or other currencies and Bitcoin and other currencies. I think eventually more people will catch on to Bitcoin, and Bitcoin will go to millions of dollars. So if you wanted to just tune out and never listen to me ever again, the easiest thing to do is just go, hey, continue to invest every month that you have extra capital to invest, because that capital is being destroyed by a corrupt government and federal bank or reserve or international monetary banking motherfuckers. So you can keep it simple and just keep trading cash for assets or Bitcoin if you wanted to simplify in general. Here, I just think there's still more opportunity in the AI space, and again, I think Fetch is showing us just how strong it is. So I wanted to keep it short and simple today. Hopefully that was helpful. Again, I'm still looking for downside. That was the strong bounce I was looking for. Bounced a little bit higher than I thought we were going to go. I thought we'd probably get to 66.3, but we pushed all the way to 66.25, which is exactly the point of control, and then turned around pretty sharply once we were ejected there a few times. So let's wait to see what we get here for a trading range, and then I'm going to be taking more positions. So awesome. Thanks for joining us today. This is Tio with the Arcane Bear. We'll see you guys again on the next episodes.